Good morning, everyone. Today is the 11th of August. This is Brad Matheny, and this is an update, a Sunday update to the Plan Your Trade video. So we are going to first look at the TT scanner, the SPY cycle patterns to indicate that we are moving in a general bullish direction, it looks like. Gap breakaway, rally could be, in my opinion, an upward trend here. I really think if I look at this, I mean, it could technically be a downward trend too. We're bearish on short-term and long-term trending, explosive market price action. We're bullish on the daily bias, bearish on the weekly bias. We've had a lot of activity over the last couple of weeks. And, we really don't move into, fairly clear trending until we get over here with this topping pattern. So I'm going to highlight what I believe is critically important here. So this is a chart that I had drawn through my weekly research and creating the other videos I have for my subscribers, but it really boils down to this. Okay, I'm going to point to this area here, this yellow area. This is the area that market price needs to defend. It's very simple. We've got this gap moving downward here. We filled this big gap on a solid rally. You can see that we're in a fairly solid uptrend. As I'm going to get rid of these lines and redraw them so you guys can see. Oops, I think I just got rid of something I might need. We're really looking at, again, a fairly solid upward trend here. And I do believe, as I stated, and I will tell you, this is a daily chart, that we're going to be looking at the potential for the markets to attempt to roll over the next couple of days into a lower low, potentially reconfirming support down in this area and attempting to move higher. If we get below this 523 and a half roughly area, then with any sort of conviction to the downside, then we're likely going to set up a D pattern here, somewhere up here. These are lowercase, so D, and then eventually some E pattern back out here, referring to an extended wave of price activity for this A, B, C, D, potentially up in this area, and E potentially out in this area. I don't believe that D and E are going to happen. It really is contingent upon this 523 and a half area. It really is, folks. We need to see the market rally up into the 540, 541, 542 area, break above the 543 and a half, 544 area, and then try to move back up in the 550 area over the next week or two. That would be my ideal, let's call it 70, 80% outcome, is that we are not going to see a deep low. We are going to see reconfirming of support in this 526 area and then a rally back to the upside. And that would make a lot of sense to me, in the sense that, we're moving down through this channel, and I can even show you we're moving down through this channel. You can see very cleanly the rejection. It would make sense to me that we would move into a sideways flagging formation across this area here, and that we would be looking at a moderate sideways move, indicating an upward trend here, a pull back down to here, an upward trend here, and a pull back, and then a breakout. And that's really 1, 2, 3, 4, 5 days away. So by the end of this week, I think that we could be easily into a breakaway pattern, then a gap, then a Bozu trending, then a top. And that would put us into a breakaway, a Bozu trending, and then a top setting up here. and maybe pulling back a little bit, maybe not quite like that, but maybe more like this before rallying onward. So I do believe that the SPY cycle pattern is solid. I do believe that the move now has to defend this 523.5 area on the SPY. If we successfully defend this area, we could move into a bit of a sideways flag before breaking out. That would be reasonable to me, given what's going on with this data. We could get some volatility over in this area, indicating that the apex area of the flag could be fairly volatile. I want you to be aware that could be a dangerous area. If you don't know what you're doing, could completely retest this 525, 526 area very easily. And then I think we're going to rally back out of this. So I expect volatility, and I expect the vortex rally to kick in. So let me come over here to the SPX 500. This is, again, I've drawn some, and I'll show them to you. Obviously, this is about gaining knowledge. One of my clients wrote to me and said, you know, how much I've helped and what I'm doing, and I think you guys are getting it too. But this is intelligent, informed investing and trading. It's really what it comes down to, is knowing what to expect. These cycle patterns give you knowledge of what potentially to expect. Now, granted, there may be only 70, 75, 80% accurate most of the time. You'll see over the course of a year, I think that number is really closer to like 91, 92% accurate, but they give you expectation. Trending is designed to give you an expectation of what kind of trend we're in. Biasing is custom and proprietary. We just moved into bullish biasing on the daily bias. Will be real interesting to see how things play out. Weekly is still negative, waiting on a new trigger, or bearish. But generally, if you look at this, we got volatility, gap breakaway, breakaway, rally. Hey, that's volatility to me. Trending potential volatility. Could be mixed. Then we get a rally. Okay. Then we get a carryover. Carryover in counter trend mode. Could be a pullback, could be a reversal. Don't know. Then we end up getting into a breakaway pattern here. Again, this carryover in counter trend mode will become more clear once we get to the 13th and 14th. So then I'll have more clarity as to what this will do. Then we move into the gap potential, Bozu trending top, which to me is bullish. Then we get a flat down after the top. That indicates we have consolidation. Then we get a Harami inside bar, which again could be, depending on the size of the flat down, it could be a fairly broad bar. Then we end up with nothing on the 26th, 27th, inside breakaway and breakaway. So we're looking at volatility, and I think that reflects as essentially, as I indicated earlier, and I'll get rid of some of these lines that were drawn earlier. Essentially, that reflects into a channeling mode. So I'm going to come here. This must have been drawn on a weekly chart. Highlight this pattern, come back in here. Really to about there. Highlight this pattern to about here. And here you go. This is a moderate flag formation that's set up that could very well turn into a trend. And you can see where I've highlighted this back here. Setting up into kind of a moderate flag. And I believe that we will be looking at, again, maybe a little upward on Monday, maybe a little down on Tuesday, Wednesday, trying to defend this area, maybe a little up here, maybe a little down here, and then finally a breakout. And I believe that this yellow flag, if you follow me here, is going to present an upward trend. This sideways flag would represent deeper price activity, meaning if we get below this level, again, which is our defense level, make this red, we need to defend against this level on the SPX 500, 52.65. We are going to then be looking at bearish trending, potential flagging, and maybe a deeper wave to the downside if this happens, maybe down here in the 5,000 area. So we really need to see this defense level hold up. We really need to see the markets generate some real solid upward activity, possibly into a flagging formation. I don't want to see this blue flag. I don't want to see this happen. This would indicate that we have a very strong chance of a further breakdown. And I think that's unlikely. I think we're going to see rotation over the next week or two into a breakaway phase. And I think it's really going to come from the area of breaking this channel. So, I'm going to come over here and try to hone this channel in for you guys. It's really going to come into basically breaking that channel. And the reason why that channel is important is I believe that this resistance, the longer we stay in this flagging formation, which will probably be a week or a week and a half, we are building and coiling. As long as we stay away from these lows right down in this area, we're building and coiling into support, which will break away eventually. Okay. And that's what I believe we're looking at over the next week or two. It's going to be an interesting week or so for day traders because we're going to be chopping around a little bit, and you need to be aware of that. Now, let's real quickly look at gold, one of my other favorites. And gold, oh, too much drawing. Gold is really setting up into what I call a flag setup, which you guys are well aware of at this point. I think we're going to see, again, I'm trying to draw it for you, this flag, not necessarily this yellow flag, but this, I'll make it red so we can see it. This flag is very, very likely. I think gold, as the markets will churn, will kind of consolidate for 1, 2, 3, 4, maybe 5 bars, and then begin to make a big move. I doubt very highly that gold is going to move downward. There's just too much going on throughout the world to really see gold move downward. And you can see this upward channel we have. I'm really expecting gold to come back over here and retest this lower channel and then begin to accelerate upward. So we're kind of moving in a broader flagging formation here across these levels. And I think that we're really looking at kind of a broad flag setup into around the 16th or so, call it 15th or 16th. Then we move into a big rally phase, I think, for metals. And I think that could be very, very indicative of market trend. I think we're going to see a very solid rally out of this. The Vortex rally is still setting up very strongly. And I think it's just going to be a matter of patience and protecting capital over the next week. Okay, guys, that's it for your weekend update. See you tomorrow morning.